Hey, Assalamualaikum. We are doing for MFRS 117. For the question 1, explain the main difference between a finance lease and operating lease. Okay, the main difference between the finance lease and operating lease. Finance lease transfer substantially or risk and rewards incidentally to the ownership, which is lesser. Why? For the operating lease, risk and rewards associated with the assets are not transferred to the lessee, which is lessee pay the lease payment to the lessor.
Now we proceed to question 2. Question 2 is state into which category the above contract fall into and explain why. For contract 1, relate with the operating lease. Operating lease is not finance lease. Reason 1 for operating lease is the period of the assets used by the lessee is not the majority of assets' useful life. For a period 4 years, divided useful life 12 years and times 100% and get 33.3% less than 70%. Reason for operating lease is the total of present value of lease payment is less than assets fair value. The total of fair value of the lease payment is annual rental of payable in advance RM 48,000 times period 4 years. It's for lesser than RM 500,000, which is the fair value of assets.
Contract 2 is a finance lease. The reason is finance lease because firstly, the lease period of the asset used by the lessee is the majority at the asset useful life, which is in these cases all of the asset. The economic life of the asset is 5 years and it is used under lessee. For the second reason is the total present value of the lease payment is more than 19% of the fair value of the assets. So the calculation will be 125,000 for the first year, and the second year 125,000 divided by the finance charge of 17.5%, and for the third year, and for the fourth year, and for the fifth year. So the total of the fair value present value is 464,550 ringgit. So the conclusion is 464,550 is more than 19% of the fair value of the asset, which is 464,500. The last reason is at the question it says that at the end of the lease period, the ownership of the asset is transferred to the lessee, which is Sang Majnun. He will take the legal possession of the asset.
Okay, for question 3, we need to prepare the books of lessee, which is the Sang Majnun Berhad. We need to prepare Sochi and also Sofi. And it states here that contract 1 is operating lease, while the contract 2 is a finance lease. Okay. For the contract 1, we prepare journal entries for the books of Sang Majnun Berhad. So we debit the lease rental expenses and credit bank at the amount of 48,000. This is because the Sang Majnun Berhad paid annual rental of 48,000. Alright, for the statement of comprehensive income for the year 2015, the extract of expenses is lease rental, which is 48,000. For the contract 2, first we need to calculate the PV of minimum lease payments. So we calculate the first year, which is 125,000 plus the second year, plus the third year, fourth year, and plus the fifth year. We need to calculate until fifth year because the question have state that the period for lease is 5 years. So the PV of MLPs is 464,554. Okay, the second one, we need to calculate the finance charge over the lease period. So the total lease payment is 125,000. We times with 5 years, and we get 625,000. And then we minus out the total PV MLP or the fair value. But here we need to choose the lowest one over these two. So in this question, the lowest one is fair value, which is 464,500. And then we get the interest expenses, which is 160,500. Next, we need to calculate the actuarial method. What is actuarial method? Actuarial method in leases is the name of the method applied to allocate interest income or interest expenses. So, in this method, we need to have the year, the opening balance, payment, outstanding balance, the interest, which is 17.5% as stated in the question, and the last one is closing balance. We only need to calculate from year 2013 until 2015. So the amount in the opening balance, we take from the lowest of fair value, which is the 464,500. This opening balance, we need to minus out with the payment, which is 125,000. The payment for every year is the same. After we minus out the opening balance and the payment, we get the outstanding balance, which is 339,500. This amount is then we need to times with the interest, which is 17.5%. After that, we get this amount, which is 59,413. The outstanding balance, we need to add it up with the interest, and then we get the closing balance, which is 398,913. The amount of closing balance of the year 2013, we need to bring to the opening balance of 2014. The opening balance, we need to minus out with the payment, and then we get the outstanding balance, which is 273,913. This amount we times with the interest, we get 47,935. The outstanding balance plus with the interest, we get the closing balance, which is 321,848. The amount of this closing balance we bring to the opening balance of 2015. The opening balance minus out with the payment, we get the outstanding balance, which is 196,848. This amount times with the interest, we get 34,448. The outstanding balance plus with the interest, we get the closing balance, which is 231,296.
Okay, first statement of comprehensive income for years ended 31st December 2015. We only have expenses. The first expenses is depreciation. For calculation of depreciation, we take amount of fair value of plant 464,500 divided by economic life 5 years. We have amount of depreciation 92,900. For second expenses is lease interest 34,448, which is lease interest of 20 of years 2050. For statement of financial position as at 31st December 2050, we have non-current asset, non-current liability, and current liability. For non-current asset, we have plant. The amount is 464,500 minus by accumulated depreciation, which is fair value of plant divided by economic life, and multiply 3 years, which is include 30, 40 and 50. The amount is 278,700 and the total is 185,800. For non-current liability, we have lease payable, which is closing balance minus by lease payment. The amount is 106,296. For current liability, we have lease payable 125,000.